Hello, lovely people out there. I'm Kate Hill, and welcome to an Advisable Property News Update. Now, you know that we do give you the best commentary and content on our channel here. So before we do anything else, please let me ask you to subscribe to our channel, hit the notification bell so that you're getting all our expert hints and tips around buying, owning, and investing in property as soon as I post them. And if you're enjoying the free content and you are finding it useful, which I hope you are, then please click on the all-important like button too. Really important, because then YouTube will recommend my videos to everyone else out there. I do really appreciate that support. Thank you. So to really explain why I am sitting here talking to you about property, buying, owning, and investing, I am a property professional. I have been in real estate for a really long time, advising and helping people. I've seen most things happen. I've gone through the ups and the downs. I've gone through all the cycles. And most importantly, I actually own and invest in property myself. I am at the property coalface every day, and I do genuinely care about empowering all of you to get the best outcomes for yourselves when it comes to buying properties. So please stay tuned. Join me for the next few minutes and I will cover off on Australian house prices rising nationally in November. The whole economy grew in the month of September. Record highs in new borrowing. And Canberra, now Australia's second most expensive property market. Now you can also watch one of my videos here. I've also listed it in the description below, where you can hear all about rental guarantees and whether I think they are worth it or not. Alrighty, let's get into it. So according to the latest data from CoreLogic, every capital city and every regional market recorded house price growth in November. Nationally, Australian house prices rose 1.1% in November, led by a 1.4% in the regional markets, which continue to outperform our capital cities. Now, in general, the apartment markets rose 0.2%, again headed by a 1.4% increase in the regions. But be careful, not every unit market is the same, and we do have some that we consider danger zones for the foreseeable future. I have reported on this in other recent news videos several times, so go and watch those. Of the 15 major market jurisdictions in Australia, which is 8 capital cities and 7 regional markets, 13 of them have recorded house price growth in the past 12 months. The only exceptions being Melbourne and also regional WA. All markets except Brisbane have also recorded annual growth in the median apartment market. In November, house price growth was led by a 2.2% rise in Canberra, with regional Tasmania up 1.8%, Hobart up 1.7%, and Darwin rising 1.6%. The annual growth in house prices has been headed by regional Tasmania, which is up 10.6%, Darwin up 9.1%, Canberra up 7.8%, and regional NSW up 7.4%. The growth in house prices has been greater in the regions in the past month, the past quarter, and the year to date, and the past 12 months. The Australian Bureau of Statistics has said that the economy in Australia grew 3.3% over the 3 months to the end of September, which is better than the 2.5% most economists had expected, which is partly reversing the 7% drop in the June quarter. So the economy has bounced back strongly from the recession, posting the fastest growth since the late 1970s on the back of a surge in consumer spending as the COVID restrictions unwind. Australia experienced a partial recovery in the September quarter, says the ABS head of national accounts. The improvement signals the end of recession, which is informally defined, as I'm sure we all know, as 2 consecutive quarters of economic contraction. Household spending, which dropped almost 13% in the June quarter, not surprisingly, rose 8% in the September quarter, and that is driven by spending on hotels, restaurants, and cafes, which began to resume more normal trading in that quarter. Victoria was the only state to record a fall in household spending of 1.2%, owing to that second lockdown that began in August. The latest set of national accounts puts the economy back on track to grow faster than the Reserve Bank had forecast last month. We would also expect Victoria's figures to show significant improvements moving forward as restrictions there continue to be relaxed. Now, the Australian Bureau of Statistics has also reported on a record high in new loan commitments for housing. The total value of new loan commitments for housing and the value of owner-occupier home loan commitments each reached record highs in October 2020, according to those latest figures released. The total value of new loan commitments for housing rose 0.7% to $22.7 billion in October, which is seasonally adjusted. The value of new owner-occupier loan commitments rose 0.8% to $17.4 billion in October 2020. And what's really interesting is that this is more than 30% higher than October 2019. The ABS Head of Finance and Wealth said commitments for the construction of new dwellings rose 10.9%, and it was the largest contributor to the rise in October's owner-occupier housing loan commitments. The value of construction loan commitments has risen by 65.6% since July, which obviously coincides with the June 2020 implementation of the government's Home Builder Grant in response to COVID-19. They have added that feedback from lenders was that there has been a large increase in first home buyers applying for these construction loans over the last few months. Not only that, in October, the number of owner-occupier first home buyer loan commitments increased by 3.4%, also seasonally adjusted. And that was more than 30% higher than in any pre-COVID month since 2009, when the first homeowner grant was temporarily tripled as part of the Commonwealth Government's economic stimulus package in response to the global financial crisis. Remember that crisis. The value of owner-occupier loan commitments rose in all states and territories except Victoria and also the ACT. Victorian owner-occupier home loan commitments actually fell 9.3% in seasonally adjusted terms, which again obviously decreased because of the housing market activity in August and September because of the COVID-19 stage 4 restrictions in Melbourne and stage 3 restrictions in the rest of Victoria. So lastly, the total value of loan commitments for investor housing was actually unchanged at $5.3 billion. Now, all of these figures from the ABS, of course, reflect the first home buyers boom that is going on at the moment. First home buyer numbers dropped in Victoria in October, but there was another big surge in New South Wales and also especially in WA in that month. This takes the first home buyer numbers to the highest level since 2009. House approvals in Perth have doubled since June. So the stimulus is likely to drive a home building boom. It's already happening. New data from our property research firm CoreLogic has shown that Canberra is now Australia's second most expensive property market, overtaking Melbourne. Canberra now carries a median value of $672,000, overtaking Melbourne, which sits at a close $672,000. Sydney remains the most expensive property market in the country with a median value of $860,000. These are followed by Brisbane at $515,000, Hobart at $505,000, Perth at $463,000, and Adelaide at $459,000. Darwin remains our cheapest capital city to buy a property in, with a median value of $405,000. Nationally, the median value of property in Australia, which includes both units and freestanding houses, In other words, everything lumped in together, and to me, a figure that's essentially completely meaningless. However, that median is now $565,000, and this figure rose 0.8% in November. Please don't forget to subscribe to our channel down there. Leave me a comment below. Hit the like button too. I really do appreciate it. And I will see you again really, really soon. Bye.